Perfect. Okay, so we should be live. I'm not sure, as this is my first stream, and I'm still trying to set things up. Let me see if I can actually find it on my own phone. Might help. It's not coming up. Um, so it's there we go. Okay, so we should be live. And I can comment in the chat. There we go. Okay, so that should be working, which is nice. Okay. Sorry about this, guys. I'm just trying to get everything sorted. I'm honestly very new to this, so it's my very first time ever streaming. Okay, so today's predictions for the market. I think we're going to have an uptrend day, in all honesty. I'm hesitant to see, or I'm curious to see how the market reacts at opening bells. We've been trending up during the London session, kind of regaining from previous lows. And you can see we're trading above VWAP, which stands for volume weighted average price. Although our 30-second chart is not looking too hot. If anything, it's indicating that we're probably going to have a bit of a downtrend, because you see here we had a double top and a rejection, and we've made lower lows here. So I'm presuming this downtrend is going to continue. I'd imagine if we rally off the VWAP, we might be lucky enough to continue having uptrend, but we'll see. We'll see what happens. I do think we'll carry on up. I think at the minute people are probably just taking profits before anything else, um, and they're just trying to make as much money and take as much money off the table before New York session opens. But we'll see. We will see. Just give me one moment. I was just checking the audio and everything's working perfectly, which is nice. So I have a friend of mine from South Africa joining in today. Um, so if you have any questions or anything, be sure to ask, and I'm more than happy to help. Like I say, I don't know everything, but I'm still learning myself. But like I say, happy to help as much as possible. So if you have any questions, don't be afraid to ask. My earlier prediction for the day was that we're probably going to be on an uptrend for the day, and we'll see what happens because we are trading around previous highs. Now we haven't quite regained everything, but we're still very much up for the day. We are hovering around resistance levels, I will say that, um, but that's fine. I think there will be a compression of price between this resistance and the VWAP here. And I think as we get tighter and tighter, we'll break to the upside because, well, we've just been on a continuous uptrend today. And I think a lot of people have taken their profits from this level and they're ultimately just trying to push price higher so they can make more profits. Um, but hey, look, I could be wrong. We just have a bit of patience here and see how the London session or the New York session reacts at opening bells. So, like I said, if you have any questions, do not be afraid to ask. I'm more than happy to help. So, as we just wait here for opening bells, how's every day's going? Outside of trading, has anybody any plans for the evening? Oh, I didn't realize I was actually on mute still. I was answering a message there. My apologies, guys. Um, but yeah, I'm just waiting for market open here. Not a whole lot I can do in the meantime. So just have a bit of patience and we will be open very shortly. As you can see down here, I have it set to New York Stock Exchange time, so we're just shy of 3 minutes or 2 minutes to open. We got a pretty heavy rejection here off both levels of support. Well, resistance now. Um, so we might be in for a bit of range bound trading at the start, but we'll see what happens here. I think we'll have very volatile open. I think we'll get some very heavy fluctuations, maybe into the downside. Um, honestly, I don't hate taking a short position, but the reason I'm hesitating is because at opening bells, I mean, anything can happen. I don't know what way the market makers want to go just yet, so I'm not going to potentially enter a trade. I am liking a short at the minute, as we had a nice downtrend here. Um, So I think this will continue, especially as we're now trading below VWAP. So I think as we keep trading below VWAP, we'll continue to trade down here. But we'll see. We'll see what happens. ATR, I have it set to each candle. So each blue dot down here represents the size of each candle in points, or ticks, sorry, not points. So as the size of the candles increase, I can see that the momentum is shifting. That's why I use this indicator. So my strategy is all centered around asking for what the market is already giving you. A lot of people try and time change in the market, and I try and ask for what the market is already given. Like for instance, some people they try and time reversals. Like they'd wait for this to fall down but then break to the upside, and they'd then enter on the break to the upside. Whereas I try and ask for what the market's already given me. So there's two types of price action: consolidatory and directional. Consolidatory, or range-bound trading as it's better known, operates within a certain range. So a good example of this would be over here, this top here. Let me just zoom in there. Oops, didn't mean to move that. So if we look here and just take a zoom in here, we can see that price action stayed very tight within this range from the bottom to top here. This is what I'd call range-bound trading or consolidatory. When price action is consolidatory, see, I'm glad I didn't take a short because I knew at open it would probably have a spike to the upside. And I'm sure this is just people taking profit before we continue to the upside. But we'll see. Like I said, I'm not right all the time, so it's just a guess. But I do think that we will continue to the upside and we'll probably break through this level of resistance here. We're seeming to have no stress whatsoever. There is a little bit of resistance, a little bit of hesitation, but I think we'll continue breaking out to the upside. But like I was saying, in range-bound trading, price action is more likely to stay where it is than move to a new area, as evidenced by the range. And then in directional, like here, price action is more likely to move to a new area. As you can see, it dropped heavily, then stay where it is. So I will go more into that as I trade and as things come up, but I thought I'd just give you a brief window into that before I continue trading, or even just watching the charts here, waiting for an opportunity. A lot of the time, people who start trading think that they need to take trades all the time and they need to take trades 24/7. That's not the case. If anything, you're better off waiting for clear opportunities before you trade, like here. So we're stalling out for this level of resistance. If we break through here with fervor, I'll certainly buy in. So we're having a micro pullback here. I'm just waiting for confirmation on the continuance. If we break above here and we sustain above here, I'll hopefully enter around here. Oops, I'll hopefully enter around here before continuing up to the upside. As you can see here, they're kind of holding very true to my my levels of support and resistance, but we'll see what happens. I think what will happen is market makers will push the price down before rallying to the upside. So I think we'll probably have a series of red candles here now before we continue breaking out to the upside. Because you might be wondering, why would market makers push the price down? And it's a very good question. And it's simply because they need to do that. They need to move the price in the opposite direction they want in order to give continuance to their orders. So what I mean by that is that if I'm buying a stock or selling a stock, I need somebody on the opposite end of that trade. So if I want to buy stock, I need somebody who's selling. If I'm selling, I need somebody who's buying. Otherwise, I have nobody to fulfill my order. So what market makers do, or hedge funds rather, as they're more commonly known, what they tend to do is they push the price down in the direction opposite they want to create liquidity so that they can then put in a large volume of orders and push the price in the direction they really want. So what they'll do is they'll push the price down, and what that will do is if people are shorting it, that'll trigger their stop losses and give them a flood of buy orders. Or it will then make people switch from buy orders to sell orders, further increasing the liquidity, whereby then they will then increase the amount of buy orders they have and send in a slew of buy orders, a large amount of buy orders, and that will then give them the liquidity they need to push the price up. So all it is creating liquidity. And all I'm doing now is waiting for a very clear opportunity with which to trade. Because as much as I could trade now, I'm not very confident in how I believe price action is going to behave. Ultimately, we're range bound in the last 2 minutes, or 4 minutes rather. Um, we're very range bound, and from that, I'm not very confident in my original hypothesis. So I'm just waiting for the price to continue in the direction that I want to take my order. As you can see here, ATR is increasing. So ATR stands for average true range. And since my period is set to 1, all that means is that it's measuring the candlesticks, each individual candlestick. So each blue dot represents one candlestick as a whole, and it tells me the size of each candlestick. So as you can see, the size of each candlestick started to increase from this point onwards, which is very evident in the charts. And what I use this for is it allows me to gauge how much momentum there is in a movement. So for instance, let's say we broke to the downside, but I could see ATR was decreasing. That means the candlestick size is not very big. It's actually getting smaller and smaller, which means there's probably a lower volume of orders than otherwise, which means that whatever the movement is has the potential to be unsustained. So using ATR is a very good indicator, especially for this strategy. Um, and again, if people are unclear of my strategy, just let me know, and I'm more than happy to go over it again. We seem to be getting a very solid hold here in terms of, oh, there we go, we broke down now. I was going to say we're holding well at this level of support, but it seems we broke below it now. But I don't think it's going to be sustained. Like I said, I think we're moving down to move up. They're creating liquidity, and from that liquidity, the price will spike. But again, it could be wrong, so we'll see how it plays out. For those very smart and perceptive you out there, you'll see I'm actually on a practice account. And my advice to those who are starting to trade is always use a practice or a non-funded account. Paper trade is your most important friend at the beginning of your journey because you get to learn in real market conditions, like I am now, but you never risk any real money. And when you don't risk any real money, it enables you to get a feel for the market without ever being out of pocket, which is obviously the most important thing because we're all here to make money. And if we keep wasting money on silly mistakes at the start of our journey, we may never have enough then to fund the rest of our journey. So you're better off paper trading until you get the hang of markets. And the way I feel you can measure your success as a trader is not about whether you're profitable or not, because you can have a really bad trade that just got lucky, or you can have a really good trade that got unlucky. And if you have a good trade that got unlucky, you lost money, but you may have had the right supposition or the right prediction of the market. So it wasn't the trade that was wrong, it's just that your entry was poor. And likewise, you could have a bad trade that goes lucky, terrible entry, but you just happen to get a market maker in the right moment and they just flick the trade and or flick the price action in the right direction for you and allow you to make a quick profit. So ultimately, whether you win or lose a trade is not a good metric for how good or bad you've been trading. But I think if you take a trade and the market continues in the direction of your trade, that is a good trade. So for me, if I took a long right now, so I bought and I hoped for it to go up and it went down, I'd consider that a bad trade. But if it went down before rallying up, I'd consider that a good trade. Now, my entry may have been poor. I could have potentially entered here, but at the same time, uh, uh, that's something else, a slightly different thing to be worked on. So as long as you're making the right predictions about the market and your entry is still poor, I would consider you a more proficient trader than somebody who has more winning trades but terrible entries, if that makes sense. Um, or actually, no, that doesn't make sense because I just basically said the same thing twice. What I meant to say is if you are losing your trades but have great entries, um, and here is the downside movement that I was talking about. I'd nearly bet my hat that the price action will very shortly and very quickly rally upwards. So I'd say we probably won't even hit this level of support before rallying up, but we can see. Because again, I believe that they're just creating liquidity for themselves so that they can continue in the direction that they truly want. Now you can't see it on this monitor, but with the time and sales, you're actually getting a flood of both red and green orders. Here we are, pushing back up now. We may continue downwards before pushing up again. So, as you can see here, we have wicks to both end of the candles. So wicks at the top imply a strong seller presence because price action was traded higher, but it got sold down to the level it closed at. And wicks at the bottom imply strong buyer presence. I think this is just a small micro pullback before we continue downwards, so I don't think that was the reversal I was looking for. Again, ultimately, trading is a patient man's game. Never, ever, ever feel urged to just take a trade for the sake of it. It seems I was wrong, actually. Seems that was the reversal I was looking for. If we break above this level of resistance, which we have, but if it's sustained, then I will potentially buy in. If it's unsustained, then I think I'm just going to wait it out and potentially short. Let's see. Okay. Say it'll probably pop off VWAP here. If we can break above here, that'll give good indication of an upward trend, but it seems as though we're stalling out at this point. So what I might do is take a short with half my usual size. Oh, let's wait. And the reason I say half my usual size is because I wasn't very confident of the price action. Wasn't sure if it was going to go down or up. So if you're never sure of how price action will react, and you are still feeling like you could potentially make profit or turn a profit in a trade, then I'd suggest trading at half your usual size, because that allows you then to still have a position without ever risking as much as you ordinarily would. That way, if you're wrong, you manage your risk well and you don't lose money. Now, this is the sustained
Order filled.
this is the sustained move I was looking for. As you can see, I traded half my size because I want to potentially buy in more at a better price. So I'm going to try and average down. I'm going to set my stop below a recent low. Set this. I'm going to have a 1-to-1 stop profit to loss ratio. Just mirror my risk and my profit on either side. I'm not getting very good movement in the direction I want, so I could potentially cancel my trade here, but I might just hold off. I think I will. No, I think I'm okay. I think I'm okay. I was a little bit quick on the trigger there before entering, but I'm very glad I did enter now, as I captured a very nice move. And I could have cut my trade here, but the biggest issue is a lot of people cut their winners too early. Never be too afraid to let your winners run, because, like I said, we're probably going to get a sustained move upwards now. We're obviously stalling out at the resistance level, but we are continuing to move upwards. And I often don't like sitting in my trades too long, so I find even if they do stall out and I know I'm probably going to still make even more money, what I'll do is I'll cancel the trades and close my position, because think of profit like a cake. You know, part of a cake is better than no cake at all. And rather leave some profit on the table. I'm just going to close my position here
Order
now.
filled.
So I made 300 in profit. It's a nice little trade. Could have held on to my trade, but we're getting a bit of a pullback here, and I didn't want to keep holding on my trade because I wasn't sure how heavy the pullback would be. And this is what I was saying before. I could have potentially made the full 500 with my trade, but I didn't want to. Well, obviously I did, but I didn't want to keep holding onto it because we could get a hard rejection at this level and I could then potentially be out. I'd rather secure some profit and re-enter. Like, look here, we got a hard rejection. And if I wanted to, what I could do is I could re-enter now at a better price again with the confirmation. But I think I'm going to hesitate because we're probably going to get more of a downward move, which will give me a better entry once more. So now that I got confirmation to the upside and we've made a higher high, I am more confident about taking longs than I am shorts. And especially if you get a continuance of the movement up. But like I said, I think we're going to get a bit more of a rejection first before I move up. Or, sorry, not before I move up, before the price action moves up. Now, you might be wondering, where am I pulling all this from? Where am I getting my predictions and my ideas from? Again, it just takes time in the charts. You get a feel for it as you sit in the charts for a while. So I have been trading now for 2 years, and I'm still not profitable. See, look, we got a very hard rejection there. And again, it's market makers pushing the price down, creating liquidity, because we are going to get a nice rally up after this. And this is something that I predicted would happen, because again, I've been trading for quite a while, and yes, although I'm not profitable, I haven't necessarily lost money. Um, I've just largely been paper trading and kind of getting a feel for things. Um, so again, market makers, they're making a nice heavy downtrend, but all of this is going to be in order to create liquidity for them to push the price upwards, same as earlier. Um, I mean, it's what happened here, and we're getting heavier rejection here. They probably took some profits, and we're probably going to get a continuance then to the upside. So I'll rather wait till I get a guarantee of that continuance before I continue with any more trades. As you can see here, VWAP is acting as a nice level of support, and VWAP is represented by this blue line here. As you can see here, I have here. Now, I have a moving average, but that was actually because I was given a lesson to somebody earlier. And I was explaining the difference between VWAP and a moving average. And for those of you that don't know the difference between a VWAP and a moving average, is that a moving average will just take the average price over a period of time and it will track that and plot that. And volume weighted average price will do the same thing, but it will include the volume profile. So for instance, the fluctuations of price may be more drastic here, but you can see that it's not really adjusting the price because the volume was very low. But as we get an increase in price and fluctuations in price, or sorry, increase in volume and fluctuations in price, you can see that it's adjusted more because it's volume weighted average price, which means it includes the volume uh, uh, when it takes into consideration the average price. So I'm just watching here at the minute, waiting for a nice entry again. And the beauty of scalping is that even if I was wrong and we do get a nice rejection here and we get a continued move downwards, it doesn't really mean anything because I'm not invested in this stock. Because with scalping, you kind of want to resolve your trades within half an hour, really. Ideally, 2 to 5 minutes, even 10 minutes maximum. But some trades are a little bit longer, take 15 minutes, 20 minutes to resolve themselves, and that's fine. Um, so I'm just going to wait here, let price action resolve itself in a specific direction before I potentially do anything. And a lot of what I think separates a good trader from a poor trader is patience, because no strategy in and of itself is entirely profitable. Otherwise, we wouldn't have traders. We wouldn't have professional traders. We just plug the strategy into a computer and let it work itself. I let it do everything itself. But the reason we don't do that is because what makes a strategy profitable is the trader behind it and their discretion on when to apply the strategy and when not to. So ultimately, every strategy has the potential to be profitable as long as you yourself can decide, excuse me, when to enter and when not to enter. And to me, that patience for the entry is what makes a good trader from a bad trader. If we always put ourselves in the need to trade, more than not, more than likely we're gonna lose money because we're in essence trying to force something that we're trying to. It's like making a stone bleed. You can't make a stone bleed. It's impossible. Um, so you can't really force a trade either because what you see, or rather what you want to see, isn't necessarily what the market is presenting you. Now, based off the candles, it seems that we're going to get a continued move downwards. Sorry if you heard my dogs in the background there. Seems we're going to get a continued move downwards. So we might test this level of support before rallying. But we'll see. I think this is a small pullback before we continue downwards. So I'm just going to have a bit of patience and wait for the structure to resolve itself before I enter. It is easy to get bored while doing this, and I always find having some music going kind of helps you stay focused. Um, or even a podcast or something allows you to stay focused. We're getting a very, very, very nice candle here. Um, so I think I was right with my original prediction about this just being a liquidity grab to push the price up. But we'll see. We'll see. This is the same kind of pattern that happened before. Push down, stall out, had a look at a little hammer candle, and then we get a nice move upwards. Push down, we stalled out with some bottom wicks. We have an inverted hammer. We pushed upwards. Now we are stalling at the level of resistance, but that's natural. I think we'll probably push through that in the next candle or two. But in the meantime, while this resolves itself, I'm just going to run to the loo. Okay, I'm back now. Sorry for that. I just responded to a message while I wait, but I was pretty sure I was correct about the price, that this was just a liquidity grab, and it seems as though I was right. We are again still stalling around the level of resistance, but as you can see, price is slowly drifting up. I'd nearly be willing to put a buy order in here and hopefully capture a profit here with a stop loss below here. I might do that with half
Order
my
filled.
size. My entry wasn't the best there, I will admit. But that's all right. It's not the end of the world. Probably could have gotten a better entry around VWAP level. This would act as a nice level of support, but it's okay. So I have set a fairly wide stop here, as you can see. But I set it below a recent low, in case just to give the price a little bit of room to fluctuate and resolve itself. But I knew I was kind of correct. That was a liquidity grab. I've seen this before very often. Look, like I said, it's stalling around the level here. If we don't get a clean breakthrough in the next candle or two, I'll probably just close my trade and take my profit. Now, a lot of people will close their trade here as they see a red candle, but that's just a small micro pullback. Remember, it's just a 30-second chart here. On the 5-minute chart I have over here, everything's still looking very nice. And we're still up. Ultimately, what I can do is potentially make a better entry. I might just wait. I was going to close. Yeah, look, we're getting a heavy
Order
rejection here.
fulfilled.
I'm going to just close the order there. Should have taken profit when I could, and that's my fault. I left it on the table for too long, because this is what I tend to do. When price stalls out, instead of having a reversal like I had there, I'd much rather take the small bit of profit on the table than potentially just lose money like I did there. So I held on to my trade too long. That's my fault. And I think this is also just another liquidity grab before pushing the price back upwards. And as we get another continuance to the upside, I'll probably enter again. But if we don't, then I'm just going to hold off for the next opportunity. As you can see, I'm not taking any trade. I'm just waiting for price to resolve itself. Again, we're getting a nice long green candle, which kind of supports my original hypothesis. But that could just be flux before moving down. So before I enter this time, I'm going to wait for more confirmation again. If we get a break above here, I'm going to presume a continuance. But if we get one more failed, if we get a rejection once more, then I feel price will continue down because we've tried to make a higher high again. It got rejected. We're trying once more. If it succeeds, then I think we'll probably move until the upside. Failing that, then I think we'll break down to the downside. So this is how your prediction for the market can change as the environment changes and the information changes. So we're still getting a continuance upwards, but it is not very quick. So we'll see. Now we got a very hard rejection, but again, could be profit taking, could be looking for liquidity, could be trying to shock people into change their orders, all of the above. I think a smart trade now is probably to do a short with a stop set just above here. Just waiting to see. Yeah, I think I'm fairly comfortable enough taking a short here.
Order filled.
I'm going to set my stop just above here. Probably should have done half the size since I'm setting such a wide stop. But I'm going to put my profit target in around this level of support. And that way, in the meantime, where it's stalled out here, I can set part of my profit target here. Look at that. That was a nice move right there. I think we're going to get continuance. So even though it's stalling out, I'm not going to cut my order here. So better entry would have been in around this level of support, but it's fine. It's not the end of the world. So you might be wondering why I set a buy order here. That's because price has previously found this a level of support. So what I'll do is I'll take half my trade off the table, secure some profit, and I'll move my stop loss down to break even. So if the trade does come back on me, then at least I've made either a small profit or break even, and I'm not necessarily out any money. That way I'm securing some profit without necessarily risking anything extra. We're having some very volatile chop here. See, if I had entered here, I would still be in profit, which is why entry is so important. It's not harder to sit and watch a red trade than it is a green. You have to feel a lot more comfortable when you're in profit. Um, but that's fine. Ultimately, like I said, never measure your success with your P&L because you could have made, correct trades, but just made silly mistakes, or just could have just fluxed against you and randomly hit your stop. Could have just been a random spike. So a number of variables to take into consideration. But I do think we're going to get a continued rejection here. Nice. Nice. Again, this is a level of support, it seems. So if we can break below this, that would be fantastic. Nice. 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 Very nice. Very, very nice. I'm just going to completely close the trade. Just completely close the trade. Why? Because I could have potentially held my trade, which would have been the better thing to do. I actually didn't have a reason to close my trade, but I was actually a little bit afraid of what happened earlier. I was afraid of the trade regressing on me. But this is another fallacy of new traders. We're afraid that our winners will turn to losers and we get rid of them too soon. Although it is best that I did that, because we had a nice reversal candle afterwards. So see, oftentimes, even though you might, before this green candle presented itself, I said it's probably not the best thing to have done, and we probably will get a continued rejection to the downside, but it's better off to secure some profit on the table and leave some potential money there rather than risk it all and lose it all. Because ultimately, if you can keep getting little wins, ultimately they'll add up and they'll continue to add up. But we got 3 failed rejections off the downside here, here, and here, and here. So I'm not saying necessarily that we will continue down anymore. I don't think we will. We've had 3 people try, well, not 3 people, sorry, 3 attempts at pushing the price downwards, and it's been rejected each time. So I do think they are just little liquidity grabs for the hedge funds before continuing up. And as you see, we're getting nice upward movement here. And we'll probably get a nice continuance now because they probably wiped out a lot of, not necessarily wiped out traders, but definitely took out some of the liquidity there. We are getting a sustained rejection. So ultimately, we're still in a very tight tug of war between buyers and sellers here. Should always be, well, okay, maybe not always be resizing your charts the way I am, but to me, it helps me reframe things in a new perspective, because I'm able to focus on what's going on now. So before I would have called this range round trading, and it is really like here's the range. Um, so if we can break out of this range, I think we'll get a very nice move to the upside. So if we get a very good break out of this range and we exceed this, I might enter and then get a nice move. And I'd say we'll probably test this level of support up here. But we'll see. We'll see what happens. Because if we break this level of support slash resistance, well, resistance now, if we break this level of resistance, then I'd imagine we will, have a very hefty move upwards because I don't have any other marks of support or resistance on either chart. I have a second monitor with a longer time frame on my other screen. I have a 1-day chart and a 30-minute chart. You might be wondering why I have multiple charts open, but it's because short-term perspective is very different to long-term perspective. So what's going on here isn't necessarily reflected in the long term. And if you are looking for the best confirmation of a trade, all you have to do is look across multiple time frames. And if it agrees across multiple time frames and the charts agree with you across multiple time frames, you have a higher probability of being correct. Because ultimately, every trade has a 50% chance of being correct and a 50% chance of going wrong. And at the end of it, if you even do a handful of things, that just skews that percentage into a 51 or 52 or even 53% in your favor, a chance of being correct, which is important because think of a casino. Most casinos, they have a 1 to a 4% house edge on every game, right? And if we can emulate a casino in our trading and have a 1 to a 4% edge over a long period of time, we'll be sustainably profitable. If we risk the same amount every single trade, but we win 55% of our trades or 52% of our trades, the long term will be correct. We'll be in profit because we're winning that 2% every single time. So on this 30-second chart, price is obeying this blue range that I drew. It's compressing, but I find that when you compress price action like this into smaller and smaller ranges, it tends to have very explosive movements. Think of it like a spring. You know, the tighter you compress that spring, the more power it has when you release it. Because it's all energy at the end of it. So we are compressing the price action at the minute and it's cooling up like a spring and it's just waiting to blow in one direction or another very quickly. We're consistently failing to break above roughly this level, even this level. So potentially we'll get an explosive move downwards to test this level of support. But again, it's all a patience game. Just wait around and see. One second, my dog is at me. My dog just wanted to leave there. My apologies. Had to put him out. Like I said, a spring coiling up with an explosive move downwards. Now, whether this rejection is sustained or not, we'll see. Because we do have a very strong level of support here on the 30-second chart. So we'll see if we can break below it. I'd imagine we will. I imagine we will for sure. And if we do get a nice rejection, we'll definitely test this level of support then. So I'm going to wait for a green candle here for my entry. I'm going to reduce my size because I'm not 100% confident on it. Nearly entered on the wrong side.
Order filled.
So I'm just setting this small amount above that candle. Because like I said, not very confident. I was ready to close my order there, but it seems to be okay. We're getting a nice sustained rejection, like I thought. And like I said, there's no real reason to exit. I'm just ready in case I do get a big impulsive move. Seems to be stalling out at this bottom level here, so
Order filled.
like I said, big impulsive move. Just shot upwards, and I cancelled my order. I should have had a bit more patience. But again, it's always okay to secure profit. It's never okay, sorry, it's never not okay to secure profit. And see, it's best that I didn't hold my trade, because again, turned back on me. So it's always important to secure profit. Take some profit off the table. Pay yourself first. If you don't do that, you stand the potential to lose your money. Now, what I should have done there was potentially closed half my position and held on to the rest. But I'm actually, because actually I trade half my position size, I didn't need to do that. And after, if you'll notice, after every single move downwards, we've had a very impulsive move upwards. Move downwards, move upwards, move downwards. So price action never ever goes in a straight line. It seems as though we are in a downtrend now because we have gotten a sustained rejection over a long period of time. So we'll probably break below this level of support. I could enter another trade, but I'd rather wait because we are getting a bit of chop here with the potential to go up or the potential to go down. And even though we are trading below levels of resistance, I'd rather not tempt fate. I do think we are going to continue downwards, but it's always good to have a prediction for what the market will do without necessarily entering a trade, because you can learn. Because let's say I said, it's going to massively shoot upwards and we're going to reclaim highest high we've ever had in the Nasdaq, because that's what I'm trading, the Nasdaq. And actually it says it in the YouTube video, so you should know. But if I had that prediction and I was wrong, I can then go, okay, why was I wrong? and I can look at a number of different factors. I can see if there's any news. Did any of these stocks, necessarily release some kind of news or something that impacted it? Was there even any news from the government in America, um, like the SEC, or was there a reduction or an increase in inflation? Did Jerome Powell release any new figures or news? Um, all these things add credence to your decisions and can influence price action. And it's all right to be wrong with your prediction as long as you understand why you were wrong or try and learn why you're wrong. Now, sometimes it's as simple as market makers just wanted to push the price up. There doesn't have to be a catalyst, there doesn't have to be a reason. Um, and that can be one of the most confusing things about trading because normally we look for a cause and effect in everything we do. Like you touch a fire, you get burned, cause and effect. So with trading, there isn't always a cause and effect. It can be very, very, very random sometimes, or seemingly random. But often it's just market makers who decided to fuck us over. Um, what we're having here is an impulsive move up. But again, it's just a liquidity grab. They're creating liquidity, and the price is going to get a nice rejection to the downside. Always frame your perspective of what do market makers want. Very clearly, they're trying to take profits, right? During the London session, I'll actually go on the so with the London session, so here from 12 o'clock on the 16th, on the London session, we're drifting upwards, 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 right? But unfortunately, people have now decided they want to take their profit. They don't like it at this price point, so they rather take the profit off the table. So it seems as though we're going to get a sustained move downwards. We're pushing heavily upwards. Whoa, we are pushing heavily upwards. All this, I guarantee you, well, I can't guarantee, but I nearly guarantee is a liquidity grab to push the price downwards. Because why? They need to make orders opposed or in the direction they want. So they need to move the price in the opposite direction they want to create the correct kind of orders for when they push the price down. Because think about it, if you're shorting, you're going to have your stop set up here, your buy orders, right? Because when you short, you sell first, and your stop loss or your limit order afterwards is a buy order because you're selling the stock and then buying it at a different price in order to hopefully make profit. So if you're shorting the stock, like a lot of people would be, that push the price up to hit those buy orders, and that uh, uh, um, well, in this case, uh, uh, they're pushing the price up to sorry, I'm getting a bit of a brain fart now. They're pushing the price up to help move it down, because people shift their orders from buy orders, um, or shift to buy orders rather with their stops up here. Or, sorry, I'm mixing myself up now, guys. Just forget I said anything. I'm confusing myself here because I'm having a bit of a brain fart while I'm trying to focus on the price. But like I mentioned before, they often move price in the opposite direction that they want in order to create liquidity for themselves. It seems to be that we are actually not in any kind of direction. I keep assuming that, but actually, if I look at the long-term picture here, this is certainly consolidatory or range-bound trading, because here's the lower bounds of the range. I'll even draw it to give better clarity. Here would be the lower bounds of the range. And here is the upper bounds of the range. Now, you might be wondering, with these outliers, how could the range only be as wide as this? Well, these are just outliers. Like I said, they don't mess with it. So for me, when I draw lines on a chart, how I measure if it's a good line or not, and I mark my chart, is with the most amount of touches. Now, I could get slightly more touches by moving it down here till I get the tips of these lines, but it's really not that imperative. I'm not using this as a key level of support down to descent. Now, these green ones have been medium-term levels of support, so they've been fairly recently as price has been going. And what I do is I use blue lines of support and resistance to mark them on the day. I use green to mark medium-term respected ones, so ones that have been around for maybe a week or a month. And then longer-term ones, I'll use orange, but I actually haven't marked my chart with any orange bars or orange lines just yet. So it seems as though we are actually range-bound trading. Now I don't tend to do very well in range-bound trading, but it's not the end of the world. Range-bound trading is as simple as waiting for the confirmation of it coming down here, entering your position here, cutting your position here, and then letting it continue before doing the inverse then as it comes back up, entering here, long into about here, and then letting it continue before coming back down. Now, why would you go for the full range? You could, but you stand the risk of potentially it falling short in the range, like here, and then coming back down, or like here, again, fell short of the range before rallying back up. So if you try and capture about 50-60% of the total movement in range-bound trading, then you stand a higher likelihood of having your trades be successful and actually hitting the targets that you want. I'd much rather a successful trade than a potential loss of a trade. Now, I could potentially buy, but I don't think we're going to break out of here. I think we're probably going to stay within this range. So I'm just going to wait, allow it to resolve itself. Ordinarily, I would close myself out and just call it a day because I made a nice bit of profit. I aim to make about 300 a day, and I'm happy with what I've made. You should never get too greedy, but I'm just trying to stay on, give a little bit more information. But it seems as though my brain is too fried for that because I keep having brain farts. So I stay on for the next 10 minutes till about half past, and then potentially call it. See if there's any more opportunities to make money. If failing that, then I'll just call it a day. If you guys have any questions before I close out for the day, please do let me know. I'm more than happy to answer any questions. So give me a shout, and like I say, more than happy to answer. I'm not feeling very confident to long this position because we have tall wicks implying strong seller presence. Well, not necessarily very tall wicks, but we get a nice sustained rejection here anyways. But that could also just be a micro pullback as we're only on the 30-second chart here. Looking at this chart here, you'd nearly think that it would continue going up. But we'll see how we continue after the next candle. The half-an-hour chart actually is giving me the impression of continuous upwards. So it may be worthwhile to potentially long it, but I'd rather be hesitant till I'm sure. You always need multi-time frame agreement. No point looking at one set of charts and getting half the picture. It's like trying to build a puzzle with only half the pieces. It's just not something people would do. I mean, if you're bored and you have no power, then maybe you would just because you have nothing else to do. But in terms of trying to complete the puzzle, you wouldn't get very far. So how can I understand the full potential uh, uh, of the trading vehicle, or the full movement of the trading vehicle, if I'm not looking at the full picture? I'm glad I didn't long, as we got a very hard rejection there. That would not look nice on the P&L. So that's why it's great to just wait. So I got a question um, about what a normal day looks like. So a normal trading day for me, before I start trading, I try and log in. So trading opens at 9:30 in American time. I try and log in 9 o'clock American time, and then I try to look at the charts and base my predictions for the day. So I have four charts open. You can do this on two monitors. You can get cheap USB monitors online. Or failing that, you can have two Google tabs open, or failing that, you can just change the time frame as you want. Doesn't really matter. Um, it's more convenient to have multiple charts open, but it's not a necessity. You can certainly trade with just what's in front of you. Um, I'm really only using the longer time frames for agreement with my trades. So as I was saying, what I do is I log in about 9 o'clock, and I try and have a coffee there just so I'm at peak performance. Just wake myself up in case I'm feeling tired for the day. Look at that. Look at that nice rejection. I'm very glad I didn't enter. Very glad I didn't enter a long position. I would feel tempted to enter a short position, but it's too volatile for me. There's no guarantee this movement is sustained. It could just be another liquidity grab before rallying upwards heavily. So I'll just allow it to resolve itself. Never feel that you're missing out on making money, because you also could be missing out on losing money too. See, we're just bouncing within this range. It's not a whole lot going on today. London session was a lot more directional than the New York session, but I think it's just we're trading near the all-time high, so they're just trying to take profit. But back to the question, my apologies. Um, so like I said, I log in at half past, and I draw my lines on the charts. So I try and find key levels of support or resistance. I'll actually clear my charts here. Remove drawings. So I'm going to clear my charts here, and I'll go about how I draw these. So I'll go into a 30-minute chart, actually 60-minute. I generally do 60-minute and 30-minute, right? So best thing you can do is go for higher time frames in order to draw levels of support and resistance. Why? Because they're more respected than other ones. So to get a perfectly straight line, I just use this tool here on the side of my thing. Allows me to draw a perfectly horizontal line. You don't have to do that. Everybody has that there. You might be wondering, why did I draw this line? Well, if we zoom in on the price here, we see as price hit this point, it rallied off it, continued to rally off it, but as it got below it, it got rejected off it. And we have quite a few decent touches here, which means that I would consider this a very well respected level of support and resistance. And another one I'd probably put is about here, because again, you can see price rejected off it and price rallied off it. So again, another key level of support and resistance. This enables me to make better educated decisions, because let's say I didn't have this chart. I was just trading off this chart. I only had this information available to me. I wouldn't know if price is going to rally here or if it's going to fall, right? But if I go back, I look, I say, okay, we've had some rejection here, quite sustained rejection here, 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 here. So I'd be willing to draw another line here, and then 2496150. So 249, oh here. If we look on 30-second chart, let's see if this has been respected before. So look, this level certainly has been respected. Price has been rejected off it many times, and it's certainly rallied off it. Here, price has rejected off it, and it's also rallied off it. So by using the higher time frames and then zooming in on the smaller time frames, we can see that these levels of support that I've drawn for you guys have been well respected throughout the time frames previous. And I use higher time frames because the more touches on the higher time frame, the more inclined you're going to get even more touches on the lower time frame. So I generally zoom out. I look about at a week of material at a time. So I draw a level of resistance here. I'd line myself up and I draw a level of resistance here, draw a level of support down here, over here, and here I draw a level of resistance. The reason I say resistance versus support is because price is rebounding off this and falling down, hence why it's resistance. If I drew one down here and it's rallying off it, then I'd call it, I would call it support. So I always start by marking my charts. And the handy thing is, once you have them marked once, they continue to stay marked, which means you don't always need to continually adjust the price or the levels of support and stuff. Once you have them drawn, you can know that they're going to be well respected because they've been there before, and it just gives you that bit of information, extra information, for when you're making your own trades. It allows you to make more educated decisions because ultimately, like I said before, it's a 50-50 chance, and we're just trying to turn that into a 51 or 52% chance on our side. So understanding these levels of support and resistance is a huge, huge key factor in that. Because if you understand the level of support and resistance, oops, I didn't mean to delete that. If you understand the level of support and resistance, then you can make more educated trades because you know, right, price will probably rally off this or price will probably stall off around this. Now, if we go back to here, you can see very, very clearly how the price has obeyed these levels of support and resistance. It's actually very, very clear. Look, stalled out around here, but then rallied hugely. Stalled out, but rallied. Stalled out and rallied. So you can very clearly see how marking on a higher time frame is equally beneficial on the smaller time frame then, because this is only the 30-second chart. We went from the 30-minute over, or the 1 hour, sorry, to the 30-second chart here. And it's very well respected. Now my blue lines are gone because I obviously removed them to draw these levels of support. So after that then, once I have my key levels of support and resistance drawn, and I'm aware of what will happen, or not necessarily what will happen, and I'm aware of how price has reacted around certain levels, then I make a prediction. I look at what has happened in the London session, because what has happened in the London session gives a fairly good indication into what will happen. I think as the day goes on, price will rally upwards, 100%. I can't say 100%, but I'm about 90% sure, right? It seems we might even be watching it right now. But it will take a while because ultimately some people want to take profits. They don't want the price to go too high. They want to accrue some stock before it continues higher so they can take even more profits then. So all this range bound trading is generally just an accrual phase. It's when market makers are trying to gain lots of stock. They're keeping the price stagnant because it allows them to slowly increase their holdings in a position without fluctuating the price too much because they can offload the shares they got at a cheaper price to take some profit. And then with that money, then they can buy shares at a slightly higher price, but then keep offloading shares. And that means they get this fluctuation like here, but it enables them to slowly build up the amount of shares they have. Oops, didn't mean to do that. And after I make my prediction for the market, then I make sure I'm ready to trade. I sit here about 10 minutes before and I make sure I'm watching price action in the time leading up to the charts because you get very, very, very strong movements in the time leading up to the charts, or sorry, not the time leading up to the charts, time leading up to the American Open, then more than likely you're going to have a very volatile day. But if you look at the time before that, before 9:30 here, you can see we got a lot of range bound trading, range bound trading. So it stands to reason that we're going to get even more range-bound trading at the American Open. So it's very, very, very important to look at what the London session is doing, because it generally continues on from what is happening in the London session. If we have very strong momentum and very strong movements, more than likely we're going to have some very strong movements in the day with the American market open. But if we don't, and we have range bound trading like we did today, well, then we're probably going to have more range bound trading again. Um, so there's never really too much you have to do as a trader, because the biggest thing is time in the charts. How much time you spend watching the charts. That's the most important thing. Um, and the more you watch the charts, the better you'll get, and the more comfortable you'll be, and the more you will learn. Um, but yeah, that's generally what I do to start my trading day. I mark out key levels, and then I get prepared then for the day. But I'm probably not going to take another trade. I was thinking of taking a long, but I'm not 100% on it. So I'd rather wait and just potentially leave some profit on the table. I'm sure we are going to get a continue up and a retest of this support level. But I'd rather just take my 629, call it a day, leave some other profit on the table, and end it at that. Thank you for everyone who's tuned in. Thank you to all the questions everybody's provided. I've really enjoyed today, and I'm really hope that it was beneficial for you all. Hope you all have a lovely day, and good luck with your future trades.